welcome back to another video. In today's video, I have a slight surprise for you guys. Pretty sure you've seen the title or thumbnail that I have a different sort of trading tool that will be available for free rather soon, but I'll get into more details about how all of that is going to work later in this video. Now, this is the indicator that is on the chart. Now, there's a bunch of lines and I'll get into detail what those lines are telling us to do. But for the most part, we have buy arrows over here and we have a sell arrow over here. So we've got some arrows that are plotted on our chart, and how we use these arrows is rather interesting. Let's go to a previous trade. Let's take this one because I do know that this trade worked because I did take it. It is a compound indicator, a trend-based indicator. It does rather well. In this case, I use it for manual trading. But the reason why I use it for manual trading is because it has a very relaxed sort of approach, as opposed to something that needs you to buy immediately, and if you miss the trade, then you miss the trade. And I'll get into details how that works. So for example, this is our signal candle because we have a signal on this candle. Now what we need to do is, and the indicator does it for you, but I'm just going to demonstrate it over here. At the signal candle, we are going to go to the open price. The open price is where we want to place a pending order. So for example, we get a signal right over here. The indicator will give you an alert when there is a signal, and you'll have a look at your setup and you will place a pending order over here. So for our stop loss, we are going to look at the previous candle. So this is our signal candle. We are going to look at the previous candle, and our stop loss is going to go at the very tip of the wick of the previous candle. I should mention this is the 15-minute chart. This is gold, so the 15-minute gold chart. Okay, so basically when the signal would occur, it's going to look like this. We're not going to know where price is potentially going to go because it is still unfolding in front of us. We don't know where it's going to go essentially at the end of the day. So you're not going to place this immediately. You're going to give it a few bars to work out, right? So we're going to give it maybe 30 minutes and decide if we want to place pending orders to get into this position. Once we have figured out, okay, it is going down, we'll place a sell limit order right over here. We'll place our stop loss at the previous candle peak, so at the tip of the wick, so the high, right? And then we will place our take profit at the lowest candle body, which is going to be, if we have seen this candle, we would place it at the bottom. But if we haven't seen it yet, we'll place it here. A couple of minutes later, we will then see this candle, this body forming over here, and we'll just move it, right? We'll just trail the price until we have now our full ready to go setup. So now we have a pending order, we have our stop loss, and we have a take profit. Now ignore the other lines on the chart. Let's just look at the orange lines over here. So what will happen is a bit later, price will retrace, but because we are in a downtrend, price will continue to go down. Now it doesn't happen all of the time, but what this does give us is an opportunity to capitalize on larger moves. So this would be 1,000 points, which would be $10 to the micro lot. So 0.01 lots would give you $10 on this move. However, if we hit a stop loss, it would be $6 in a loss. So if you were trading with $100, you'd either make 10% or lose 6%. Depending on your account size, the percentage will vary. But if we keep it simple, just for the demonstration purposes of this video, I'll refer to everything as a percentage and just assume that we are working with a $100 account. Okay, just to make it easy to differentiate. Price retraced, it triggered our trade. It went about 300 points in the negative before continuing down. It didn't trigger our stop loss, which is fantastic. I took this trade yesterday, I believe, and it worked out really well. Now let's go and have a look. This is another example. Let's just quickly take a look at this one. So here we have a sell signal, and I should mention I'll probably have this solved by the time this indicator goes live, but it does sometimes have false signals. I saw this morning. It doesn't happen all of the time. It doesn't repaint, so the signals remain on chart, but because we are not rushing our entries, it is very easy to identify and basically know what to ignore or what to take. But in any case, for this sell signal over here, we will have another sell limit order right over here, and we'll place our stop loss up here, although I do feel this is a bit of a stretch. Let's just see how many points this is. Okay, well, this is 500 points. Personally, I wouldn't want it this big, depending on the move we will be catching, because for this particular system, personally, I want to see at least a 1.5 to 1 ratio to 2 to 1 risk to reward ratio, because it has the potential to get us very big gains. Now, as this trade would have played out, and we will do a visual demonstration soon, I'm just pointing out the fundamentals of what I am looking for when placing my limit orders, because I get to place this order and then I get to go out, right? I get to go do whatever I want to do, come back, and then I either have profit or I have a loss. It's very simple. It's very stress-free. In this case, this candle would have formed, so we probably would have started by placing our take profit over here, but then we saw, okay, the next candle went a bit further down, so we'll just go there. But you'll notice the take profit, I don't put it at the bottom of the wick. Let's just zoom this in. I don't place the take profit at the bottom of the wick. I place it at the bottom of the candle. And the reason for that is because I want a higher percentage chance for the trade to hit take profit. If we put it at the bottom of the wick, there's no guarantee that price will revisit that wick. There's a smaller likelihood for price to revisit this wick right over here, as opposed to price revisiting the candle body, so the closed price. We want to place it over there. That's where our take profit is going to be, and this is our next trade setup. So this is approximately 800 points, so 8% to 5%. Still not perfect, still not really in the range where I wanted to be, but we'll have other positions that do 4 to 1 ratios. So as long as on average we have a 2 to 1 risk to reward ratio, that means we are always coming out on top, even at a 50 to 60% win rate, which this currently has. So this is where I would place my pending orders, and let's just assume the market is currently at this level here. So we can't see the rest. We don't know that it's going to go further down. For all we know, it's going to go up and hit our stop loss. But it worked out quite well. It would have triggered our trade right over here and gone down and hit our take profit. Now, yes, if you put your take profit a bit lower down, you would have made more, but we have to follow some set of rules just to make sure that we are in the game. One very important rule, and this is something we'll notice quite soon, is that sometimes the indicator wants us to place our stop loss tight like this. And in a lot of these cases, when we have such a small stop loss, the trade just stops out immediately. So we definitely need to take a bit of liberty. This is where, if I automated the system, this is where it will begin to cause problems. I wouldn't say it will fail. It's more to a degree where we are throwing away money, because if we had the opportunity to make 8% on a position, but it was stopped out because we touched our stop loss in this area, that would be very frustrating. Even if the loss is small, minuscule, it will still affect the larger outcome, because this could have increased our balance if you decide to use this for prop trading, and this is prop friendly. I do like the system for prop trading because it is essentially a manual trading system, and you do not have as much explaining to do to the prop firm. As soon as you have an EA, they ask questions. Is this a retail product? Do you have the source code? They ask you all of these questions in some cases, And you have to try and answer it in a way that will not cause them to not want to fund your account. So being able to manual trade is such a huge, massive advantage for prop trading. I also want to point out that, for example, we had this signal at 3:30 in the afternoon, and when the trade would have been triggered is at 4:45. So approximately 1.5 hours later. So it's a very relaxed approach. You don't have to get the signal and immediately react. It's actually best to give it about 30 minutes so you can figure out where to place your take profit. And if it doesn't look good, that's when you ignore the trade. That's when you leave it. You don't have to be in the market all of the time. The more you are in the market, the more positions you have floating, the more risk you have that is vulnerable to losses, right? So we don't want to be in the market if you aren't feeling good about the trade. However, do not be discouraged by losses because they happen, right? Losses happen, and if we just stick to a formula, everything will work out fine. Talking about that, it's probably only going to be sometime next month when I will have an EA version of this, but there are a lot of factors that need to be considered, things that you as a human being will notice, but an EA, an algorithm, will not notice. It will not understand why this is not meant to be a trade. Even as an EA, it has its own challenges, but I do understand that a lot of people do not have the free time or have a job during the day. So for them to try and take trades is a challenge. And of course, I'm not suggesting that you distract yourself while you are at work to try and take out your phone and place pending orders and whatever the case may be. So an EA will be released, but you'll probably find that the manual trading results for this is going to be a lot higher, especially if you get the hang of it and know what to look for. Okay, so what else do we have? These here would be EuroSurge because it is very rapid. Here we have another sell. Let's see how this one would have gone. We have our entry right over here. We will have our stop loss, and this is where intuition has to come in. Are you really going to place your stop loss here if this is your trade, if this is your money? Are you going to place your stop loss here or are you going to place it here? Let's just look at our points. This is 306 points. If I had this in an EA format, it's going to place it up here. And that would be 700 points. So if this, for argument's sake, is a $100 account, that's a 7% loss. This candle would have formed. The next one would have the same low, essentially. And this is where we would place our take profit. So as the market would be developing, price would have come up over here. I don't know, probably went up, triggered our trade, gone down, had this whole thing, got back to break even, and would have taken profit over here. This is quite a close call, to be honest, because this would have hit take profit. But if for whatever reason your take profit was just out of reach, it would have stopped out. So this is not a very confident win, but a win nonetheless. Okay, so let's quickly hop into what I really want to show you, and that is this. So let's get rid of the graph, and the indicator also has a win rate, as well as it'll display the points accumulated according to itself, according to its plotting. Of course, your results are going to probably be different because you can't catch every single trade, but you also don't have to. Okay, that's the beauty of that, is what makes this indicator, or at least this trading style, a lot more relaxed. You don't have to rush into it. Okay, let's let it run. I have to pause it sometimes so that we can catch positions. Let's see what we have. So right over here, first thing, this is wrong. We have a buy signal and a bearish candle. This would be considered a false signal. This is what I saw this morning, but it won't repaint. The signal will remain there. It'll just not be a valid signal. You'll clearly see if you have a buy signal in a bullish candle, just ignore it. Okay. Although what happened this morning was I had a buy because price went up and I thought it was a buy, and it wasn't a buy. So I had a next candle. The next candle, it showed a buy also wasn't a buy, and the one after that was the actual signal. But the way you can verify that is after the candle closes and the signals are there, you can just reinitialize the indicator, and whichever one is indeed valid is the one that will remain. And also remember, we're not in a time crunch, so we can give it 30 minutes after a signal to verify if it is a valid signal and if we want to take the trade, if we want to set ourselves up for a pending order, because a lot of the trades only execute an hour, maybe 2 hours after the fact. You just set yourself up and then you walk away. Let your positions, let your strategy play out. So this is not a valid trade. Here we have a trade, and what will happen is this line for sell will be red, and as soon as it is triggered, the line will become blue. That is just visually to see if I am too late for a trade. So if the line is blue, it means it's already, according to the indicator, is triggered. We don't want to enter, just leave it for the next one. But over here, this is our entry point. We'll enter for a sell limit right over here. This is our stop loss. So our distance to stop loss is 136 points. It's rather tight. I do prefer to see minimum of 150, but we have to follow rules. If it is less than, let's say, 100, and we don't really have a fallback candle. So for example, here we could go back to maybe this point over here, which would be 190 points, which is recent enough that it would be a relevant point in the market to be looking at. But in some cases, we don't have that, and we don't just want to put stuff anywhere, right? We don't want to put our stop loss up here for no reason. We need to have a reason to put things where they should go, or else we are guessing, and we don't want to guess. Any case, this is 130 points. Our take profit is 300 points. So it's about a 2.6, 2.7 risk to reward ratio. Yeah, let's see what this does. And that hit take profit. So there we go. We've got 329 points. The indicator will record that. So it'll record when the pending order is triggered, when it becomes blue, and if it hits stop loss, it'll record it as a loss. If it hits take profit, it'll record it as profit, and then count the points and add them so that over time you can see how many points you've allocated, or at least gained or lost. What I should mention is that in some cases with false signals, the take profit and the entries are together, right? So they are exactly at the same place. Now you, looking at that, would not take the trade because there's no way to place your take profit, at least in a logical sense. So you wouldn't take the trade. However, the indicator will still record that, and because it would trigger the trade and immediately detect a touch on the take profit, it would consider that as a win. However, it will not add any points to the calculation. So the win rate will be almost deceivingly higher than what it is in actuality. However, the points are accurate. So I thought I would just point that out. The points at the end of the day is very important because that is the money. Win rate doesn't matter. You can have a 10% win rate system if you have an average of 20-to-1 risk to reward ratio. So win rate doesn't really matter at all. It is how much profit you can make within that win rate. Okay, so this was a successful trade, and almost immediately, and this is the problem also with the indicator almost doing this automatically, it has taken this, and potentially we would have taken this trade. Well, what's the time? This is really late at night, so I doubt it. This is, going for midnight. So yeah, it said to buy here, the trade triggered, and I believe it triggered in one move. So it triggered here, it hit take profit because it was jumping around, but it would eventually also hit take profit. So yeah, okay, it's going to count that as a win, although I doubt anyone realistically would have taken that trade. This is what I mean. This is the problem of having it automated as an EA, is that it will want to have, in this very case, this is 50 points, 53 points. This is not at all a good stop loss situation. We'll probably want to set it up here at, which is 195. So that's where I would want to see a stop loss. Not over here. This is too tight. But let's let the indicator show us what it would have done. So what you'll also notice is that the take profit line will move with the candle bodies, but after 5 candles it'll stop, because that is basically also enough information for us. If we were to take the trade, we would see, okay, it's jumping around, let's put our take profit somewhere here, because it's just a safer bet to put our take profit somewhere here, maybe there. How much is this? This is 700 points. So if it hits take profit, this would be 7%. And if it hits a stop loss, it'll be 0.5% a loss. But I mean, realistically, we need to give it room to move. So let's see what happens. Okay, so that is a common thing as well. It doesn't mean if there is a breakout or a trend continuation, that doesn't mean that we will always have the price retrace before continuing, because that is basically what we are doing. We are trend trading, but we are trading the retracement. We know price is going down. At least we think we know price is going down. However, we are looking for a retracement so we can get in at a far better position to continue with the trend. What happened here? We have a stop loss. Okay, so here's an example. This is very confusing. We have a buy limit right over here, and then our stop loss is above that. It should be below that. Now, yes, I can code it to understand that this shouldn't be possible. Logically, we'll look at this and notice this big move and just think, maybe not, right? What is the time here? Okay, this is early in the morning, so you probably would not have taken this trade. If you have, you'd have to do some calculated. You'd probably move your stop loss. Yeah, this would be decent. You'd probably want to have it set up here, and then you take profit quite high up here. But let's see what happens here. I don't think anything can happen because it's backwards. Once again, we have a very tight stop loss, 92 points. We'll probably want to put it up here or close to that, but especially with this, with this risk to reward ratio, this would be 750 points, so 7%, 2.5%, so that's about a 3 to 1 risk to reward ratio. You'd want to put it up here, but let's see what happens. Oh, I believe it hit take profit. Yeah, okay, so this, I would call this luck. Right? Price was 50, about 50 points away from stop loss. This was so close. Realistically, you would want your stop loss a bit further away. I don't know. Up here would be fine. 200 points is good. This is just luck, in my opinion. But in any case, it did work out well. We are now 12% in profit. However, there was not much room over here for this to go wrong. If it did go wrong, it's not a big loss, to be fair. What is this? That would be $1. That would be 1% to 100. If you're using 0.01 lots and a $100 account, I wouldn't suggest that you have your risk this high, but at the same time, you can, and you are doing this, right? You are managing your trades. It is, in a sense, very therapeutic. I do enjoy this process by looking at the system, looking at the suggestions and thinking, well, you know what, maybe I should do this, or maybe I should, because the only thing that I generally do different is change my stop loss according to the suggestion. Okay, let's find another one. This is not going to be a trade because once again, we have a buy trade in a bearish candle. Bearish candle is not what we want to see when we have a buy signal. You can see right over here, we have our take profit and our buy limit is on exactly the same place. So if this was an EA, it would try to open those positions. But you as a logical human being would look at this and say, that is not a trade. So, okay, it's counted that as a win, but it didn't allocate any additional points because it would literally open the trade and close it immediately. In fact, you would have a loss because of commission and spread. So you would have a couple of cents in a loss. Yeah, so that is not a trade. That is not valid. Hence why this win rate is not going to be accurate. What we want to be looking at are the points. We had a sell signal. It went down. Price came back up. Did it cross here? And take profit is down here. Okay, a couple of problems here. Look at the distance from to our stop loss. This is fine. This is fine according to the logic, 300 points. But look at our take profit. This is a 1 to 2 approximately, so or a 0.5 to 1 risk to reward ratio. This wouldn't be a confident trade for me. I wouldn't want to take it because the risk, it's just against us. So either I make 2% or I lose 3%. If the system was designed to do that, like EuroSurge is designed to have a lower risk to reward ratio but a higher win rate. This system isn't designed with that. This system wants to capitalize on larger moves. So this technically, yes, is a win, and yes, it did accumulate points for us, which would put us up at 14% profit. However, I think this should have been avoided, but it did work out at the end of the day. And that also depends. You see how close this line is, the signal line and this here. It is very possible that there might just be the spread difference that this trade would not have triggered, although the indicator can't know that. The indicator can only see if it crosses. It can't take spreads and all of that into account. It's not an EA, it is an indicator. And ultimately, okay, so it would have triggered the trade, and the next candle it would have taken take profit. So maybe even if this was a bit optimistic, it would have taken the trade here. It would not have been a stop loss. Let's just let this play out. Wait, okay, so once again, if this was an EA, it would have taken, oh wait, no, it needs to cross above and then down. Why? No, this trade is active. Why didn't it? It is supposed to record this as a stop loss. I did notice in my testing of this. Okay, so I'm not going to rerun this, but I believe this is a. If this trade was taken, where was it? It would be at the bottom of this. That would be 400 points. So this would take us down if this trade was taken. However, if you let the trade play out, looking at the signal, you would notice price is going down. So why would you place your, we need price to go up and retrace, not the opposite. So that's why as an EA, this trade would be taken and this trade would have been a loss. So that's just something to keep in mind why it's not currently an EA. All of those factors can be considered. So for example, I can tell the EA to only consider the trade if the next candle is a bullish candle. However, for the EA, this is considered a bullish candle, right? Because it's not a negative candle. So this, even if price just went tiny bit high and closed there, it would consider that as a bullish candle and that the trade is valid, and then price may have gone down. And that's where the human intuition really becomes a factor with this sort of system. And the reason why it is a suitable system to manual trade is because there is no rush. All right, you'd look at this 30 minutes later, you'll immediately know it is not a valid trade. This one here is not a valid trade. This one, I believe, was taken, and we also discussed that this trade really should not have been taken because of the disparity between or the risk to reward ratio not being ideal. However, if this trade was taken, it would be a loss and we would have lost 4% and our points would have come down. Also, when speeding this up too much, sometimes some calculations are skipped with the indicators. So when you do your testing, don't run it at full pace, run it at about half pace, right? So that it can catch all of the things that it's supposed to identify. I have tested this multiple times, and that's why I know sometimes it can skip outcomes, for example, this outcome. But at the end of the day, we also have to look at it and say, well, it's not a robot that will be doing the trading. It is myself. It is a human being. So you would have to run the system or go back in the charts and kind of visualize how you would do things there. Okay, here we have another one. We have a sell and we have our suggested stop loss, which is at a good place, but yeah, I would put it at 3%. And then what is this? This is currently at 4% take profit. Let's just let this play out a bit. I paused it accidentally. Okay, that's huge. Okay, so notice the take profit level continuously adapting with price. Okay, so let's reassess, right? Because you're going to have time. You're going to have time. This is a pending order. This is not a open trade yet. You're going to have time. So we can reassess and say, okay, this is 1300. This is about 13% gain, and our stop loss is at 3.5. So this is approximately a 4-to-1 risk to reward ratio, which is pretty nice if it works out. And it did not work out. It triggered and it hit our stop loss. Yeah, okay, that sucks. And now we're down to 10%. And indeed, if the previous loss also was felt, this one here, we would actually be at 7. Okay, and then once again, we have a buy trade right over here. This is the last one. Okay, you'll notice the take profit stops here, even though price went beyond that. It's because we are just counting 5 candles from the signal, I believe. So it's 1, 2, 3, 4, 5. And after that, we don't really care what the price is doing after that, because it's too past beyond what we are looking to achieve. We don't want the positions to be open for days. This is a day trading approach. Swing trading and all of that we don't want here. Let's see. Okay, we've got 259. Could technically put it over here. But 400 seems a bit of excessive. 300 is pretty good. Another 3-to-1 risk to reward ratio. See how this one plays out. Oh, it just triggered the trade. How many points is this? That's about 90 points in the negative. Just missed our take profit right over here. Just missed it, like 21 points, and that would definitely be a miss because of spread. And it hit our take profit. So this was a fantastic trade. This is about 1 week in from testing. So from starting, this is about 20% increase. Now it will vary because not everyone is going to get whichever trades. Some people might have taken this trade or whichever trade which didn't work out well and took a stop loss. So it's going to vary from person to person. To have 20% increase in 1 week is a lot. You are asking a lot from a system. However, if you trade manually, this is reasonably achievable. Just by using your intuition without excessive risk. I don't think we really saw anything beyond a 4 or 5% drawdown to achieve a 20% increase. It'll continue like that. Now, please bear in mind that these points and these win rates are according to what the indicator would do, not what you would do. And also the indicator is going to count a break even as a win as well in terms of the win rate. That's why the win rate is so high. I think maybe two or 3 trades here. So let's just call it a 50% win rate. However, you can see when it wins, it basically makes up for 3 losses, right? So 1 win is really effective. And if the win rate can remain at 50, maybe 60%, it is an excellent system for that. And you can test further back and have a look at all of that. I will be converting this into an EA. If I don't talk about it in the next month, it's probably because it does horrible as an EA. So many systems, so many strategies that people use. I always get this question, why does my strategy work when I trade manual, but as soon as we turn it into an EA, it fails? And it's because of that human intuition. It's because you would see a setup and think, you know what, maybe we shouldn't be in the market right now. We've seen this with EuroSurge now recently. We had quite a lot of trades being taken against the bigger trend. And that's because the EA can't understand the bigger trend. It can only see what it is being told to look at. So it might think, oh, this is a buy, but overall we have a much larger trend going down, and that affects the bottom line at the end of the day. I should mention that the tool that I use is for my trading, is for the manual trading, is this. I built this a while back, and it is available on MQL5. The link is down below. It is free. Go and pick it up, even if you don't intend to use it now. 6 months later, you might think, a tool like this would be useful, and now there's a price tag on it because I may have developed it further, right? So pick it up while it's free, even if you do not intend to use it anytime soon, because any updates that I make down the line, you will get all of those updates and you would not have paid anything for this tool. As for the indicator, I'm going to announce the launch date. It's probably going to be sometime over the weekend because I have plans. So I want to launch it and kind of get it out of the way. For the first 2 hours on launch, it will be free. So make sure to keep an eye on the group chat, because in the group chat, I'm going to say, hey guys, in the next 2 hours, EuroSurge is going to launch. It'll be free until this time, whatever, GMT plus 2, etc. And then after that, it is going to cost money. So make sure to pick it up while it is free, because there is going to be a price tag on that, and I'm not going to make it free again. It is going to have a fixed price that could increase over time. So pick it up while it's free. Also, if you see this video later and you missed the free opportunity, please don't message me on MKL5 and ask me for a free copy, because I will not give you one. And I'm letting you know reasonably ahead of time to be prepared to pick it up for free. So if you missed it and there is a price associated with it, well, that's just how it is. And also with the EA on its launch, if it ever does get to that point, I have too much that I need to focus on the side. In any case, regarding EuroSurge, Gold Surge, a whole bunch of stuff, I'm not really paying attention to any other things outside of that, but I just had to get this video out just to keep stuff moving. So yeah, go and pick this up. Go and pick up the trading utility. Also, if you are not on the group chat, go and join the group chat. It's linked down below. I don't want anyone messaging me and saying, oh, they didn't know. Well, there's really nothing I can do about that. And this is just a way for me to give back to you guys, to the community, to the people that make all of this possible, right? I wouldn't be able to keep putting in all of this work and time and effort into these systems if it wasn't for you guys. So that is why I'm giving you first dibs, first opportunity to get the stuff for the best deal. Yeah, so that is all I wanted to discuss with you guys. Have an awesome day. I'll see you in the next video. Bye-bye.